Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, second day of 2025 and we did see a good close yesterday. Despite we did not have any major cues to begin with, but of course a good close and a good session for yesterday as well. Today, however, the Asian markets have resumed trading and they have begun on quite a mixed note. While Wall Street will open tonight, we saw the US futures indicate a good start for the time being. However, our own markets, the GIFT Nifty is pointing to a weak start. If we look at the pre-opened rates, Sensex is up, Sensex is down about flat in the red. Even Nifty is not doing that great, down in the flat in the red as well. Well, it is the Nifty weekly expiry day, so volatility is expected to remain on the higher end as well. So lots more lined up. Don't go anywhere. Keep posting your queries on our live feed and we will take them up shortly. We will also be discussing what your trading strategy should be ahead of the third quarter earnings with our experts and what the stocks are in focus today. But first up, let's quickly take a look at the top headlines this hour. Wall Street remains shut for the New Year's holiday, but futures trade slightly higher, indicating a positive start for 2025 following a stellar 2024. Asian markets trade mixed this morning as China's manufacturing growth missed expectations. The GIFT Nifty is indicating a lower start for the Indian markets. Tata Motors December sales meet estimates even as commercial vehicle segment comes under pressure. The company, however, expects CV sales in the fourth quarter to improve. CLSA downgraded Wipro to hold from outperform rating as it expects the company to clock flat sequential growth in the third quarter. They believe that the next leg of re-rating for Wipro could only be achieved if it starts growing in line with peers. All right, if we could quickly take a look and a recap of yesterday, smart recovery for both the frontline indices. Sensex settled above that 78,500 odd levels, while Nifty was above that 23,700 odd levels as well. So the next level to watch out for Nifty would be for 23,800 on the higher end. But of course, 23,500 would act as a key support on today's trading session. As I mentioned that it is the weekly expiry day, so the volatility is going to be on the higher end as well. Yesterday, however, majority of the supports came in from the heavyweight stocks. We saw the likes of HDFC Bank, do well. L&T also did well. Reliance Industries also did carry major of the heavy lifting in yesterday's trading session. In the broader end of the markets, however, the small caps outperformed and the mid caps also saw a steady set of gains as well. And yes, among sectors, Nifty Auto Index, that was the top sectoral performer after auto companies reported better than expected December sales figures. We saw Tata Motors also come in with a better set of numbers, and even Ashok Leyland has reported their December sales figures as well. But let's move on and look at how today's trade setup looks like. First up on your screen is the option queues data. We can see that the Nifty put call ratio has risen to 1.06 levels from 0.99 levels in the previous session. So there is some bit of an optimism which is coming in for the markets, a little bit of bullish momentum which can be carried forward in today's session also. The next on your screen is the F&O ban list. Well, one new addition on the F&O ban, that is your Manappuram Finance. However, there were no retentions and there were no removals as well. Next on your screen is the fund flows data. Well, FIIs once again, they have extended their sell-off, 11th day of straight sell-off, and they have sold about 1900 crore rupees worth of Indian equities. DIIs, on the other hand, they have bought around 1700 crore rupees worth of Indian equities. Now, just a couple of minutes before we hit the opening bell, it looks like going to be a lower start for the markets. Pre-open rates have been pointing out as so. But let's quickly get on board with our technical expert of the show, Chandan Taparia of Motilal Oswal. Chandan, good morning. So good to have you back and wish you a very happy new year.
Good morning, Lovisha. Thanks for having me. Wishing you and entire team and all the viewers happy new year. We wish wealth, health and prosperity in 2025 to continue and scale to the new highs.
Thank you so much, Chandan, and I hope that we do scale new highs as well. But Chandan, to start off, we did see a smart recovery yesterday, first day of 2025, and it settled above that 23,700. Do you expect this momentum to continue, or how do you expect the January seasonality to play out?
So when you talk about the seasonality, let me give you some interesting fact about the seasonality. In last 10 years, 7 to 8 times in the month of June, we remains negative. And if I look at the India weeks, in last 10 years data, starting from 2014 to 2024, uh, the average volatile moves are near 22% in India weeks. And the minimum surge happens is 7% and maximum is goes to 35 to 48%. So as per the historical seasonality data, India VIX is likely to see a surge of 7 to 15-20%. And if VIX surges, then definitely there will be the spike in the market. So be ready to fasten your seat belt. There are two reasons for such kind of surge. First, the beginning of the new year's, and now the focus will be on the upcoming union budget, and as the global headwinds are there, so because of that the index is likely to see the rough ride. But the good part is that already we have seen a corrective move from higher levels. If I look at the last 13 days of the data, index has corrected from 24,770 or 24,800 to 23,460, and we have seen buying interest for second consecutive days, and it formed a bullish candle at the bottom, which indicates some sort of recovery could be there. Apart from this, FI's long short ratio has gone to 13%, and we have noticed in last couple of quarters that whenever this ratio comes near to these levels, it tends to see an oversold scenario and witnesses recovery. So by combining all the fact, we believe 23,333 could act as a positional support to drive the index towards 24,444. But for immediate point of view, one can keep the support near 23,650 to witness a swing towards 24,000 in the Nifty index.
Okay, 23,650 and 24,000 we can eye out for. But Chandan, what about the Bank Nifty index? That also fared well. So what is the next level that you're watching out for?
So Bank Nifty has been moving in a broader range. It witnessed some swings, but from last almost 7 days, it has been moving in between 50,500 to 52,000. So that is a broader range. On immediate basis, one need to follow the support near 50,500 to witness a recovery towards 51,500. So I'll play this 1,000 range, mixed set of cues, volatile swings, play the 50,500 to 51,500 zone.
Okay, all right. Chandan, what about Nifty Auto Index? We did see better than expected auto sales figures, and even the index reacted positively in yesterday's trading session. Where do you see the index go from here on?
So Nifty Auto has been consolidating in a range from last almost 45 trading session. This index has met bottom near 22,700, but follow-up is required, and it has been trading below its 50-day exponential moving average from last 53 trading session. On last trading day, we witnessed some recovery and an early sign of reversal on the weekly chart after the corrective move of last 13 to 14 weeks. So getting a sense for early recovery in the Nifty Auto, and preferred pick will be Mahindra and Mahindra, one of the strongest counter holding well to its rising support trend line. So with support of 3020, it can head towards 3200 marks. Apart from that, Aishwarya Motor has been moving in a range. Broader trading band is likely to be in between 4500 to 5000. So as it has taken support at the lower band, so it may witness the recovery to the upper band. So M&M, Aishwarya Motor would be two preferred pick. And apart from that, TVS Motor and Maruti are bottoming out. I believe Maruti can provide a better risk reward ratio with support of 11,000. One can see a bounce towards 11,650 to 11,750 in Maruti as well.
Okay. Chandan, what about Tata Motors? Because the company did record like a flat year-on-year increase in total domestic sales, and the stock has been also quite lagging in this point of time. So do you expect the downturn for the stock in the near term, or how do you expect the stock to pan out?
So Tata Motors is comparatively weak, and we believe that alpha could be generated in other name including M&M, Aishwarya Motor and Maruti. But yes, the beaten down name in last 22 weeks, it had seen a corrective move from 1180 to 720. So some recovery could be there. But trust me, it requires a follow up because the trend was negative. It needs to hold 770, 777. Then only the bottom could be placed for a bounce towards 820, 850 marks.
Okay, at 50 marks that you will be eyeing out for Tata Motors. But Chandan, any other sectors that investors should watch out in 2025? What are you expecting?
Yeah, so talking about theme in 2025, I'll focus on 4 to 5 theme. First will be capital market related theme. The way demat accounts are increasing, SIP flow is 23 to 25,000 crore per month. Awareness of the equity and overall positive sentiment from last 4 years are the reason that why people are looking to have the more demat accounts and more interest in the equity markets. Even after the 17 crore demat account, we are still contributing 11 to 12% on the total population. And if it goes to 25 to 30%, I think there will be huge liquidity in the market. So entire focus on the capital market theme. I can talk about CDSL. Major trend is positive. Corrective move of last 2 or 3 weeks is over. With support of 1700, this counter can head towards 2000 marks. BSE is other name. So BSE, CDSL, or I can say four sector in this capital market theme, including broking, AMC, depository access could be in focus. Second theme will be digital India or news and business. Whether you talk about Paytm, Policy Bazaar, Zomato, Swiggy, all these will be on radar. Third theme will be your consumption, including gems and jewelries, fashion, gold, or I can say hotel industry could be in focus. Fourth theme will be your rupee related. So rupee is falling down. So because of that, selective IT and pharma could be in focus. So this is what the sector and theme I am closely watching to play the market to generate the alpha in next 1 month to 1 quarter.
Okay, okay, all right. Let's take some stocks in focus. Well, first is your Realtel Corporation. Well, the company did say that it has received about 78 crore rupees order from the Bharat Coking Coal. Chandan, if you look at Realtel Corporation, past 6 months, the stock has been down about 14%. What do you expect next for the stock?
So Lovisha, the stock has been falling down from last almost 5 to 6 week or 5 to 6 months rather, corrected from 600 to 360. But now the bottoms are being formed. Major trend was negative as stock was making lower top, lower bottom on the weekly chart. But recently it has formed a bottom near 388, 390 and surpassing its key moving averages. So I believe with support of 395, Railtel can see a bounce towards 430 to 440 zone. Another selective railway name could be in budge as we head towards the upcoming union budget in beginning of the Feb.
Okay, all right. Just less than 3 to 1, and then we'll be hitting the opening bell as well. Pre-open rates. Initially, they pointed out to a weak start from the Indian markets, but they are hoping for a positive start. Well, of course, Nifty 50 on your screen, 23,750 odd levels. It has opened up above that. Could be trading near, could be testing 23,800 that we were talking about, the upper band of the resistance zone for Nifty 50. If you look at the advance decline ratio at this point of time, definitely the advances are taking an upper hand. If you look at Sensex, that has also opened about 0.2% uptick, 200 points gain above that 78,700 odd levels as well. If you look at mid cap index, that is also up about 0.2%. Small caps also doing well, about 0.3% gain coming in for the small cap index as well. If you look at among the sectors, what is not doing well, however, is your Nifty consumer durables index. It's seeing flat in the red, but majority of the sectors is now trying to gain up in the trade and pick up pace with the market as well. Nifty auto index definitely yesterday's outperformer, extending its gain today, also up about 0.4%. Nifty media index yesterday also it was one of the top performers, up about, today also it is up about like 0.3%. Nifty private banks doing well, Nifty bank index doing well. So most of them are trying to stage a recovery, and most of them are trying to pick up at this point of time. If we look at some of the top Nifty 50 gainers at this point, we can see on the screen it is your Kotak Mahindra Bank, Bajaj Finance, Tata Motors reacting positively to their December sales figures. Maruti Suzuki, once again, yesterday it was the top Nifty gainer, and today also it is one of the top Nifty gainers, seeing a gain of about 0.7%. Dr. Reddy is also doing well. Shriram Finance also one of the top Nifty 50 gainers. However, in the losing end, if we look at the markets, then we can see the likes of HDFC HDFC Bank not doing well. Wipro reacting to CLSA's downgrade, down about 1% at this point of time. Adani Enterprises also down 0.3%. Bajaj Auto not doing well. NTPC, Adani Ports, HDFC Bank, one of the banking index heavyweight, that is also not doing, down about 0.2%. But let's take a stock in focus, that is your Wipro. Well, definitely CLSA has downgraded the counter from hold to hold from outperform. Chandan, what are you eyeing out for? Because the brokerages are saying that the Q3 could witness a flat sequential growth.
So looking at the Wipro, we have seen some profit booking decline in last 3-4 days. Otherwise, major trend of the counter is positive. We have seen a decent recovery in last 20 weeks from 140 to 320 marks, but now it has negated its higher top, higher bottom, so some profit booking is visible in the counter. But even after that, the good part is that the stock is holding well above its 50-day exponential moving average. And I've noticed that from almost 100 days, every time it comes to 50-day and turns higher. So I think it's near to a key support. Wait for some more dip. Let it find a bottom near 290, 292. And then we can buy at the time of recovery with the view that support of 50-day which could work well for this counter.
Okay, all right. Let's take another stock in focus, that is your NMDC. The stock has been reacting positively after the company posted 5% year-on-year increase in the iron ore production for December. However, the iron ore sales have declined by near around 7% year-on-year. Chandan, NMDC as a stock, how does it look on the charts? Because recently it has been on a declining trend.
So looking at the NMDC, the major trend of the counter is negative and it has been making lower top, lower bottom from last 4 weeks. And before that, it was finding multiple barrier at 82. 4 times in last almost 22 weeks, it exactly took hurdle at 82, 83. And that supply has taken stock at the lower band below 68 marks. So structure is weak. Don't want to go for bottom facing. Let it find stability first rather than looking for buying interest in the name.
All right, some stability could be looked out for on the stock. But let's take another stock in focus, that is your Goa Carbon. The stock is reacting very sharply, positively to this, up about 5% at this point of time after the company has announced resumption of operations at its Bilaspur unit, which is located in Shirgati industrial area of Chhattisgarh. Chandan, Goa Carbon, not much of a mover if you look at from the past 6 months performance. Any good move that you're eyeing for? Today also the stock is reacting very positively to this news.
Somehow, certain companies from this sector is doing well. In fact, the trend was slightly negative that is now taking a shape to witness a recovery. The stock has seen a corrective move from 1000 to 630 and now bottom is being formed near 670 something. It has negated its lower top, lower bottom on the daily chart, formed a strong bullish candle, and follow-up is clearly visible. So with support of 720, we can see a bounce towards 785 in the name like Goa Carbon.
Okay, all right, 785 levels. But let's take some of our viewer queries. They have lined up a lot of queries for us today, this morning. Well, the first query coming in from Naveen is asking the view on Zomato. Zomato, how does the stock look like on the charts, Chandan? I think you're quite positive on Zomato, as far as I remember.
Yeah. So I'm quite positive on the entire theme, and in fact, yesterday I came through the interesting data of the orders by Indian or the different cities that people are crazy to order, and there is the change in the lifestyle. And I'm sure you must have enjoyed the beginning of the new year by celebrating with Zomato and all. So I think the same trend remains intact in the India as a whole. Lifestyle has changed. People need the festival to cheer the sentiment, and I think Zomato plays an important role in that. Yes, positive view for positional point of view, but yes, on short-term point of view, one can put the support near 270 to witness a recovery towards 291 to 295 zone.
That's right. We all did celebrate quite a bit, and of course, Blinkit did see a record number of orders on the day of New Year's Eve as well. But let's move on to another viewer query. Is asking on Naveen is asking on the view on Godrej Properties. Godrej Properties, how does the stock look like on the charts? Because like past 6 months, the stock has been quite negative. Where do you expect the stock to go from here on, Chandan?
So in real estate counter, we were positive and we were very selective, mainly name like Oberoi Realty and the Lodha. However, Godrej property has been moving in a range, witness a corrective move. It attempted for a failure breakouts beyond 3000 marks. It failed to hold 3000 and corrected towards 2760 levels. However, from last 4 days, it has been moving in a range, but hurdles are not being surpassed. 2810 is an immediate hurdle. If that is surpassed, then only the shape of the chart pattern could change. Otherwise, the stock has potential to see further decline towards 2600 and 2500 level. So positive on the override, but Godrej can see some more decline before it gets the stability or the U-turn from those levels.
Okay, all right. More positive on Oberoi Realty. But let's move on to another viewer query that is coming in from Satya. He's asking whether or not it is advisable to average any of this stock in for 2025. He's asking for CMS Infosystem or Eclairix or Cient, and he is holding them all above that 5% higher levels. Chandan, how does all these three stock look like on the charts for you?
So we need to understand that broader market witnessed a profit booking decline. The Nifty is down by around 3,000 points from its lifetime high of 26,277, and we are now lower than that. However, witnessed some recovery, but even after that, selective sectors have not performed or some profit booking was seen. So the name he is talking about, Cient or CMS Info, I believe if he is ready to hold for positional, then he should wait. He should not exit in some losses. But yes, if taken for trading point of view, then he needs to follow the risk management mechanism to exit off if the key levels are broken. Talking about CMS Info, I believe the stock is from the bottom near 480, 482, and with this bottom, it can see a bounce towards 535.40 zone.
Okay, all right. Let's move on to another viewer query. Well, Nitin is asking the view on Kalyan Jewelry. Kalyan Jewelers, Chandan, how does the stock look like? Because the stock has been quite on an upward trajectory as well.
So, looking at the Kalyan Jewelers, we believe in this theme, and in fact, I shared with you that positive view on the consumption and especially this discretionary expenses theme will be in focus rather than talking about FMCG. Positive on the Kalyan. On weekly chart, the stock is at the verge of breakout after the 14 weeks long consolidation phase. On daily scale, it has taken support at its 50-day exponential moving average and has been making high tops, high bottom. The stock has seen a recovery from 715 to 780, and a small follow-up could lead it to up by 5 to 10%. So can consider to go long with support of 755. Look for a rally towards 800 and 835.
Okay, 785. But let's move on to another viewer query. That is your Debu K is asking the view on Crompton, Crompton Greaves at this point of time. Yesterday, the stock did see a 5% decline, he's saying. And what is the next that is we can eye out for Crompton? A very sharp decline. If you look at the charts, also quite negative, from a 1 month or a 6 months perspective. Where do you expect the stock to go from here on, Chandan?
Yeah, so looking at Crompton, the stock is forming a negative price pattern. Earlier in the mid of November, the stock has made bottom near 370 and then witnessed a recovery to 420. It has come to the same level and making a negative patterns on the daily and the weekly chart. In fact, the rounding sort of or head and shoulder pattern is visible, a rough kind of, which has the negative implication. So I believe if 370 is broken decisively, stock can see a further corrective move of 10%. So if 370 is broken, look for liquidating the position because in that scenario, it can go down till 340, 335 marks. On upside, if it moves above 383, then only the stability will be back in the counter. So do mind the key levels which I mentioned to play well in this name, which is turning into the negative price pattern.
Okay, all right. Let's move on to another viewer query. That is Maheshwar Bhanu is asking the view on NetWeb Technologies for the long term and whether he can add or hold or exit at this point of time. Past 1 month, good performance coming in for NetWeb Technologies, up about 4% in otherwise weak market. So where do you expect the stock to go from here on, Chandan?
I think the stock which you mentioned, we need to look at the follow-up activity. Major trend was the mix. Stock has been moving in a wider range. Volatile cues are there. Selective movement is there in this sector. So I think can hold, wait for some decisive volume surge to get the more clarity in the counter.
Okay, all right. Let's move to another viewer query. That is, your Satya is asking for IndusInd Bank and whether or not we can enter for long. IndusInd Bank, recent news of MFI sale loan, the stock did see some good reaction coming in. But where do you see the stock to go from here on? There's a lot of noise about deteriorating asset quality.
Yeah, so looking at IndusInd Bank, the structure is down. The stock has been making lower top, lower bottom, and the major dent happened in the month of October 2024. However, from last 9 to 10 days, it has been consolidating in a range, but the structure has not changed. However, the selling pressure has taken a pause. So it would be tough to comment. We need to look whether the stock manages to surpass 1000 or not, because above 1000 only the setup will get a relief. Otherwise, the weakness could persist in this counter.
Okay, all right. So wait and watch for IndusInd Bank coming in right now. But let's move on to another viewer query. That is, your Alex is asking the view on Jyoti Labs and whether or not it can be a play on FMCG for fresh longs. What do you think, Chandan? Is it a good favorable buy from the consumption basket?
So Alex is asking about Jyoti Lab, but this stock is in pressure. But at the same time, it has come to the key level. Earlier in the month of June, it took support near 366 and turned higher. This time also it made bottom near 368. So structure is down, but stock has come to the key level. So because of that, some recovery could be seen. Risk reward ratio is favorable because already we have seen a corrective move from higher levels, all the way from 600 to 375. So I believe a hold of 400 is required, and in that scenario, this stock can bounce to 425, 430 zone.
Okay, all right. Let's move on to another viewer query. That is, your Nikul. He's asking what is your advice about Sagility India share. Sagility India share, what do you think, Chandan? Recently reached a new all-time high as well, and it has surged over 40% in the last month as well. Where can we see the stock to go from here on?
So I'm not closely tracking this name because data are very limited. But yes, if I look at the limited data setup, this stock has seen a decent recovery from 27 to 36 or 27 to 56 precisely. And but from last 4 days, the stock is turning lower. So I'm not getting the clear sense because of the major trend and the lower data setup. And again, one need to keep in mind about the support of 44. So till it holds 44, look for some recovery, but need to wait for more data setup to get the clarity about the trend and the charting system.
Okay, all right. Let's move on to another viewer query. That is Hemant. Hemant is asking the view on Kotak Mahindra Bank. Kotak Mahindra Bank recently seeing some action in the stock here, Chandan. Can we expect the bullish momentum to continue, or is this just a short-term phase?
So Hemant, after a long time, this stock is forming some bottom on the daily scale after the consolidative move of last 50 days. 4 times it took hurdle at 1800 zone and now holding above the same. So 1795 could act as a support for a bounce towards 1850, but one need to keep in mind that this stock remains positive to range bound. So we can't expect a firecracker in this counter, but yes, positive to range bound kind of setup you need to apply in this stock.
Okay, all right. Let's move on to another viewer query. That is your Anand Swaminath. He's asking the view on EIH hotels for intraday or same day trade and whether what is the good entry and exit points at this point. EIH hotels, past 1 month, good returns coming in. Chandan, what is the next that you eye out for the stock?
Yeah, so looking at EIH, thank you, Anand. Anand, the stock has multiple hurdle near 435, and I believe recovery could be there. In fact, we have positive setup in this theme of the hotel and tourism industry. Multiple barrier are near 436, 440. Look for this decisive breakout, and I believe this breakout will be there looking at the price setup. So with support of 415, look for an upside target towards 444 in EIH hotel.
Okay, all right. Let's take another viewer query. That is, Shweta is asking the view on Persistent Systems. She's bought it at 5,526 levels, and she's asking whether or not she should book profits and shift to another company, or she should continue holding it for the 6 months. Very strong performance coming in for Persistent Systems, and we are seeing quite a bullish trend. And then, what do you expect?
So persistence has positive stance. Multiple supports are visible at 6250. And the good part is that even after some profit booking in IT, this stock has not surrendered, which clearly indicates the outperformance and the resilience nature of the counter. So with support of 6250, looking for a spike towards 6,800 to 7,000 marks in persistent system.
Okay, 7,000 mark also could be watched out for in persistent systems. But let's move on to another viewer query. That is, your Geetu is asking the view on KFin Tech and should we hold or sell at this point of time? Chandan, what do you look on the charts for this counter?
Thank you, Geetu. KFin Tech has positive view. In fact, I have positive view on the market or capital market theme. It has been making higher top, higher bottom. However, it has been consolidating in a range from last 4 trading session. But till it holds above 1450, we are expecting the ongoing momentum to extend towards 1650 to 1700 zone.
Okay, 1700 zone coming in for KFin Tech. Let's move to another viewer query. That is, your Ganesh is asking the view on Indian hotels. Indian hotels, 6 months strong performance. Chandan, what do you expect? Do you expect the bullish momentum to continue?
Yeah, Loisa, positive view on the sector as a whole. And Indian Hotel is one of the strongest name which really delivered a strong performance, price and the data performance in the 2024. And I believe this positive sentiment will be uh, forwarded to next or upcoming 2025 quarter as well. So with support of 850, one can continue to hold long position for an upside target towards 900, 920.
Okay, just one last question before we let you go, Chandan. What are your trading picks for this new year? What are your favorable buys?
Yeah, last but not least, positive view on the theme which I mentioned. So one should look at the theme. Let me repeat: capital market, digital India, IT, pharma, and consumption theme, mainly the discretionary hotel and all. Now, looking at the precise trade as of now, positive view on counter like Coforge or persistent system. Here I want to mention about Coforge. With support of 9400, it can go to 10,000 plus kind of level. Looking for some recovery in the IT name. Apart from that, United Spirit will be in focus. We are keeping the radar on the counter from last couple of days. With support of 1600, it can head towards 1800 kind of level. So United Spirit and few capital market related could be in focus, including few IT name.
Okay, all right. Well, all right, Chandan, thank you so much for your time. Thank you for answering viewer queries so patiently. We hope that we connect with you soon.
Thank you.
All right. Let's take a quick check of the markets at this point of time. We did see a strong start for the Indian markets. Both the Sensex and Nifty were headed for a good start, but however, they've come off from its day's high. Sensex is now up about 140 points, whereas Nifty is still above that 23,750 odd levels. We opened up above that 23,790 levels. However, now we've come to 23,786 at this point of time. A bit of the cool off from its highs as well. If you look at some of the sectors which is not doing well, that includes the like of FMCG, Nifty FMCG down about 1/10% at this point. Nifty Auto Index, however, one of the top performers as well, up about 0.2%. Nifty IT Index doing well, up about 0.7%, and of course Nifty Media Index also doing well at this point of time. If you look at the mid cap and the small cap indices, they're also holding well but flat in the green at this point of time. Small caps, however, outperforming mid caps, up about 0.4%. But let's quickly move on to our next guest for the show. We have Aishwarya Dadheech of Fident Asset Management. Aishwarya, a very good morning and a very happy new year to you.
Good morning, Lovisha. Happy New Year to you and all the viewers, and wish them a lot of luck for their wealth creation journey.
Thank you so much, Aishwarya. Aishwarya, last time we spoke, you did mention how it will be difficult for the markets to tread higher in the first 3 to 4 months of 2025. Now that we have seen a significant sell-off, do you still stand with this view, or do you expect any change of course to take place?
So, if we like, obviously, we are starting this calendar year, but we should not forget that this was the ninth consecutive positive return from calendar perspective of our Indian market. And if I look closely on FY calendar year 2024, the first half was very robust, right? We made a very decent return, which was large part of it was washed out in later half to 2024, and we all know the reasons around that. But obviously, calendar 2024 was a very difficult year with a lot of geopolitical things happening around, election in major countries, including India and US, and we saw all sort of slowdown in consumption, things like that, which was played out. But as we enter calendar 2025, I believe that there will be two important determinants for the market to do or find out cues from here onwards. So the most important thing I think the market will be taking care of is how this quarterly season pans out. We have seen a very muted set of numbers in quarter two, and the expectations of quarter three are all not that great for us to really pick up the market very sharply in the initial part of the calendar year 2025. So I think the most important determinant is how this quarterly third quarter pans out and what kind of cues it will give to the market. And on top of it, when Trump takes over the office, I think in around 19 or 20th January, the announcement that will dictate the terms of the market, both global as well as India. So in short, calendar 25 will to me look a bit difficult market. What we have seen in the last 3 4 years, you spray and basically pray and you create wealth. Possibly aren't happening in this calendar year like what we saw in calendar 24 later part. A lot of this mid cap and small cap or even large cap where we have seen value being beaten down in the last 6 months, we haven't seen that swift recovery yet, right? And that will only happen if we see some sort of a positive surprise on the earning momentum, and if we find more rhetorics in Trump new administration than substance, which can really, dismantle the whole global equity market and things like that. So I'm a bit cautious, Lovisha, for the initial couple of months. And I believe if things do well, possibly we will see some sort of strong market hold in the second part of this calendar 25. So investors have to be cautious, at least for the next couple of months for sure.
Okay. Aishwarya, you did mention about the Q3 earnings season and that markets are still on a wait and watch mode as well. So what are you expecting from India in this time? Are you expecting, because Q2 was quite a dampener. It was quite a disappointing quarter for the investors. But now we can see the, private sector growth has picked up. Inflation has also moderated a little bit. So where do you see Q3 earnings? How do you see the growth projections for quarter three?
So the expectation of Q3 are already muted. Like market are not expecting any firecrackers happening anywhere around, right? If I closely look at that, the slowdown we witnessed in consumption is not very clear, right? There are still some pockets, some areas, especially say in rural side. If you look at say discretionary side, two-wheeler side, uh, possibly things are looking good. So what I understand is, there are a couple of sectors which can possibly show us slightly bad numbers. Say chemical can be one of them, where we are not seeing much recovery happening on prices and volumes over the last 3 months or so. But if I look at the large sectors which will actually dictate terms, if say BFSI, they're expected to report decent numbers. Right, we obviously saw the credit growth come out slightly lower, but with interest rate cut happening around the corner, the expectations of some pressure on NIM and some pressure on return ratios eventually, but no negative surprise at least from the large private banks and the PSU banks are expected. IT I think will be more or less decent. We've seen Accenture, we haven't seen any so far warnings on IT from any of these companies, so I think they should do well. If I say the last quarter, the biggest drawback or the drawdown was happened was with the oil and gas. I believe with stability on the crude prices and with the improvement in the petrol and the diesel crack, even if you see the Singapore gross refining margins have also improved up. So they can surprise slightly on positive side because the expectations are low. But I'm not really expecting too much happening around. So it should be a muted number. Even if the reported numbers as expected, I think market will take it positively. There are certain sectors like consumer discretionary, obviously, and things like that, which can give us this positive surprise. FMCG particularly can provide with a strong rural segment, can be the joker in the pack, can give us good outcome of that. Hotels could be one of them, pharma and healthcare, but not too much expectations have been built up. That is what my point is. So we'll see how this quarterly season pans out.
Is there any sectors that you believe is going to be more, on the downturn and could disappoint the markets from the Q3 results?
So the one which, as I mentioned, which comes to the top of my mind is obviously chemical. Chemical is one sector where we were expecting recovery happening around, but if I closely look at month-on-month prices of majority of these chemical products, we are not seeing much of improvement. Actually, we have seen some of the chemical commodities have actually gone down in prices, which will possibly have some negative or adverse impact on many of these chemical commodities related businesses. So chemical is one of them which possibly can provide surprise negatively more than what the expectations are. If I just look at some of the data, you see industrial real estate have done phenomenally well in this calendar 24. But the pickup in the expenditure when you saw the June 2024 hasn't really done well, and there were expectation that government will push things going forward. But when we saw the data coming on December 2024, we haven't seen much happen both on the private as well as the public capex. And we are just almost like a couple of months before we close this financial year. So a lot of this, I would say, industrial and possibly all of that, which are a play on consumption, also which are play on investments, might surprise us adversely in this quarter. So that is one of them. Auto, if you see, should be like they have been investors darling, one of the best performing sector, especially in the H1 of 2024 in calendar year. Possibly will not really put up great numbers. So I believe auto also would be kind of a mixed bag where the expectations are pretty decent. So chemical, industrial, and automotive are the area which can cause negatively surprises than what the street is expecting.
Okay. What about the new age themes, Aishwarya? Because we did talk about traditional businesses, but what about how are you viewing like the Zomato, Swiggy, or PB FinTech for that matter?
So we are, I have to put it a bit prominent here that we are very, very positive on this whole space. I believe when the way we are moving up close to $5 trillion market cap, which India is playing close to $4 trillion GDP, we can't be much bigger unless we really create a lot of wealth in these businesses which are powered by digital, right? So even in our fund at Fident, we have a decent exposures to the Zomatos of the world and other digital companies. And I believe the growth is very, very strong in sectors like in segments like this. And as I said initially in my initial when we started this, that money making will not be very easy in this calendar year 25. You have to stick with businesses who are reporting strong earning growth, where we are seeing that the re-rating potentials is very strong. And one of the sectors which comes to the top of my mind is all of these new age businesses. So that is we are very, very positive on that. But obviously, the valuations here are pretty stretched. A lot of easy money making has already happened. So one have to be very careful that the quarterly results for the next 2 to 3 quarters live up to the expectations of the market in businesses like this. Otherwise, the derating can also happen very swiftly. So one have to be careful. But when we are doing our analysis and we are making in our own numbers, we believe that these businesses of new age businesses, even the platform businesses, where there's a play on financialization or saving, are expected to report very, very decent numbers. And we are excitedly looking forward to the numbers that they print for them to sustain this kind of wealth creation that they provided to investors.
Okay. Aishwarya, after Q2, plenty of earnings downgrades happened. Markets did see quite a bit of a sell-off. And, a lot of sectors also did see a lot of correction as well. So any sectors that you believe would warrant more correction from here on if the Q3 earnings, if you believe that the Q3 earnings is not going to pick up pace in line with the market expectations?
So see, one thing I want to really point out to all the investors or viewers here that if I see the last say 4 or 5 year of earning trajectory of India, and we look at how the stock performance has been, right? They are more or less in tandem. So earning growth from FY20 to FY25 expected is close to around 16-17%, right? And where when we look at the price performance, it's been close to around 14% CAGR over the last 5 years. So we have not seen huge amount of valuation froth being there in many of this, especially after the last 6 months when we have seen that derating happens and very, very aggressively in a lot of the sectors where earnings didn't hold up well, especially in mid cap and small cap, and many of the stock which has gone down 20, 30, 40, 50%, they haven't recovered their the decline so far. which over the last 3 years we have seen it has happened swiftly. So why I'm putting this data is that a lot of this slowdown in the earnings in majority of these companies has been properly factored in. Even if you look at Nifty 50 valuations, we are trading close to 20 times forward, which is almost in line with the long-term 5, 10-year average, right? And there are obviously some froth in mid-cap, which are basically trading at 50 times, 50% premium to large caps. But the lot of froth has been taken care of. So even many companies, if they report really bad numbers, then there is a case. But a decent number or a muted number will not see significant derating as you asked. But specifically coming to sectors, one sector which comes to the top of my mind is BFSI, because market is very positive on BFSI as a vertical. There are two specific reasons. If you have seen the RBI stability, financial stability framework in the report which came out, BFSI is standing very strong from majority of these operational parameters. Whether you look at from asset quality, capital adequacy, if you look at from other important parameters on BFSI. And even if you look at the credit growth and deposit growth, which was basically missing, has also inched up. So the expectations from BFSI is decent. But if we see some sort of surprise, like what we saw with IndusInd Bank, with MFI exposure last quarter, if we see some negative surprises coming on BFSI, then we can see some bloodbath happening, because last quarter the investors are very bullish because of the valuation and the growth part. So that is one sector which I will be very careful of, especially in quarter 3.
Aishwarya, what about the microfinance sector? Because in the RBI report also, like you were talking about, we saw that the stress did double from the April to September period. So how should traders position themselves for the MFI sector?
So, even in various of my previous interviews, I have categorically asked investors to stay away from MFI. I think it's a very beautiful business, but you have to time it with perfection. You don't make this kind of ROAs and NIMs across any of this other BFSI vertical. But I somehow believe, if you look at many of these companies, the small finance banks who have a decent exposure to MFI, they're all down 40-50%. The problem is, as you mentioned, that we are not seeing any recovery happening on asset quality with our interaction with many of these companies. So the pain is here for at least some more quarter, right? So even if investors who want to be opportune and get into these companies, I believe that there could be a 6-month, 9-month kind of a stress in the whole system before we see any sunshine. So that the risk reward is not really favorable, in spite of the valuation comfort. And coming back to your questions about the negative surprises, is I believe a lot of these companies who have exposure to MFI possibly will come out with more deteriorated data in quarter 3. This is what we're expecting at Fident. So we obviously are not having any exposure to MFI, but if anyone want to keep or bring that exposure, I believe it's not yet in time. You still have a couple of quarters to wait out to see really how the things pans out. Similarly, like Lovisha, what happened in chemical, the markets was very expecting gradual recovery in chemical prices and things like that, but that still hasn't turned out favorable. Same thing possibly will happen with MFI. And if you look at this stability report, the area which I think the RBI is a bit worried about is unsecured lending and businesses like that. So we have to be a bit more watchful about on that rather than just jumping on with the guns.
That's right. But lovely chatting with you, Aishwarya. And with that, we have to let you go. Thank you so much for your time, and we hope that we connect with you soon.
Thank you so much for inviting me.
All right, let's take a quick check of the markets. Well, at this point of time, Sensex is holding above that 78,750 odd levels, up about 200 points. Nifty is also above that 23,800 levels. So yes, we did see the day's low, but now it has finally recovered back, and it is above that 23,800 levels as well. Small caps once again outperforming the markets. Nifty IT index holding very strong. IT index is the top sectoral performer at this hour, up about 1%. Bank index up about, very marginal flat in the green at this point of time. Metal index, however, is not doing well, down flat in the red. Nifty Pharma index, after 3-4 days of consecutive buying, it is down about, seeing a bit of a profit booking, and it is down about, 0.5%, 0.5% declines coming in for the pharma index. Nifty Realty also not holding well, seeing a cut of about 0.3% at this point of time. But, with that, we have come to an end of this edition of the opening bell. Do not forget to tune in at 3:30 p.m. for closing bell, and we will be discussing about how the market has developed, what the stocks were in focus. Until then, signing off. Do stay tuned to moneycontrol.com for all the news updates and market insights.